Our next speaker is Bersagel. Bersagel is an advisor for the Norwegian Insurance and Pension Fund, KLP. She engages in dialogue with and, in most serious cases, recommends divestments from portfolio companies based on their compliance with the UN Global Compact norms. She holds a GD from Stanford Law School and Masters of Philosophy in Peace and Conflict Studies from the University of Oslo and a BA in Economics from the Wake Forest University. Prior to coming to KLP, she worked at an international law and policy institute and at McKinsey & Company, both in Oslo. Yes, and she is a US citizen and a member of the California Bar Association. And I warmly welcome Annie to the podium.
Hi, my name is Annie Bersagel, and I'm from KLP. I just want to get a sense here of the group we have. Could you raise your hand if you're a member of a financial institution here? Okay, and a non-financial corporate institution? Academia? NGOs? Okay, great, thank you. So I'm mindful of the time here and want to make sure that we have a little time for a question and answer also with Asbjørn, because I'm so pleased to have been invited to this, and thank you to Landsbanken for organizing this conference. And I have to admit that part of my motivation in coming here also is to learn a little bit more about the Icelandic responsible investment community and more about what you're doing here, also in the kind of the broader discussions that are going on around climate change. So I've been asked to come here to give a perspective on a fellow Scandinavian institution's approach to climate change and climate finance. So I'm going to start by giving a little bit of a background about KLP and our investment profile. I think it's kind of important to understand that, also to understand the kind of tools that are at our disposal, and how we chose the strategy that we did. So a key point that I just want to reinforce there is that the climate strategy should really be developed to fit the investor profile. So I also want to describe a bit of the journey that we made in reaching our strategy. I would be lying if I said that it was an easy decision to come to exactly the approach that we've developed. And I'd like to kind of take you a little bit along that journey of how we got to where we did. I suppose if it had been a total flop, you wouldn't have invited me to come here. So we'll go through that. And I would like to share a few reflections. It's been now about 1 year since we implemented our strategy, and to just give you a little sense of what we've learned thus far. So just a little bit about KLP. We are Norway's largest life insurance company, and we manage the pension assets of Norwegian public sector employees and related health organizations. So, for example, all the hospitals in Norway, a lot of them, the nurses and the doctors will have their pensions in KLP. And it's about 90% of the municipalities in Norway are covered by KLP. We also have a small but growing segment of external funds that we provide to customers. So, a basic retail customer, you can buy a fund, you could go online and buy a fund in KLP. So in total, the assets under management are about 513 billion Norwegian kroner. And as I said, the majority of that is for KLP, the KLP group, management of those pension assets and life insurance, and then there's the fund customers as well. We're invested in over 3,000 companies globally. So you can basically name your world problem, and we are probably invested in one way, shape, or form. And that poses special challenges for us in responsible investment. So a little bit about our investment profile. We are broadly diversified and primarily passively managed. So what that means is that we're invested globally in index funds. So our investments are based on the size of these companies in the various stock markets. We also have a smaller portion of our investments that are actively managed in the Norwegian market in particular. We have a high degree of automation, which is low cost and effective. We are the leading provider of index funds in the Norwegian market. We also have an ethical screening of our investments. And this is something that began in KLP around 2000, and it actually began with our customers. So the health organizations began asking why KLP was invested in tobacco companies. And we thought this is a very good question, and we ultimately decided to exclude tobacco companies, and that was really the beginning of our approach to ethical investment. And I would say that we're lucky in this respect in that since our owners are these municipalities and related public sector organizations, I would say they're not only supportive of our mission, but they're also pressuring us and inspiring us to do better all the time. So speaking of active owners, in March 2014, we received a letter from the City Council in one of the municipalities that is a member and owner of KLP, Eid kommune in Sogn og Fjordane. Beautiful part of the country if you've ever been there. So the letter asked KLP to evaluate whether we could divest from fossil fuel companies without affecting the portfolio's risk and return. As you can imagine, a few of our Norwegian asset managers kind of gulped a bit. Although the Norwegian market, it's very heavily oil and gas dominated, I would say, I think the stock market now, we're at about a third of the market value from oil and gas companies, although that is shrinking at the moment. So this came at it came really timely because there was a similar exercise going underway for the Sovereign Wealth Fund for Norway, and momentum on climate change had been building, and we really decided it was time to review our strategy. So we decided to launch a broader report looking at this question. So we're looking at the tools that are that are at our disposal, and that's first divestment, which I've mentioned now. Also active ownership. We are a passive investor, but we are an active owner. And that means not only that we vote at the AGMs of companies that we are invested in, but also we constantly engage in dialogue on issues of social responsibility. And that's not just the climate. As you can see on the bottom here, these are the issues that are among the criteria for divestment. So that's human rights, rights of individuals in war and conflict, corruption, environment more generally, so often issues of pollution, also weapons, which would be landmines, nuclear weapons, and cluster munitions, as well as tobacco, and other ethical norms, which is kind of a catch-all criteria. Right now, the exclusions under that are based on activities in Western Sahara. So looking at these three tools, we asked, what are the ethical and social challenges regarding potential divestment? Do we have an ethical responsibility to do this? Also, what is the expected financial benefit? And Asbjørn was in on this a little bit, kind of the concept of stranded assets, looking at that. And lastly, what would be the environmental impact of divestment? So these were some of the central questions that were in our report. Will there actually be will we achieve the desired environmental effect? Or will there be no change? Is this really just about KLP having clean hands, but it's not really changing anything in the world? We also looked at the carbon bubble hypothesis. Is there evidence of a systematic mispricing in the market of fossil fuel companies? And then the kind of ethical and social concerns that should be taken account. So here are our main findings. On the environmental considerations, we found it very difficult to say that in the short term, there would be a major effect. And this is primarily because we're looking at very liquid markets. If we sell one security, it's going to be purchased by another investor, and the overall level of carbon emissions in the world is remaining unchanged. But we did see that there was a symbolic effect in that we could influence companies and political decision makers. And I'll come back to that, but in hindsight, I think we tremendously underestimated that point. On the financial considerations regarding divestment, we couldn't find evidence for systematic mispricing in the market. Yes, there are fossil fuel companies that will get it wrong, and they cannot burn all the reserves that they have and still be consistent with the 2-degree scenario. But we didn't find enough evidence that this was something new for the market and that this was undervalued. But to be fair, that is always a very difficult exercise. On the ethical concerns regarding divestment, fossil fuels are a bit different in this respect from, say, tobacco, where it's very difficult to think of a positive use for tobacco. But when we're looking at fossil fuels, they do, like it or not, they do provide energy for many of the world's poor. And if we were to get rid of them overnight, we would have it would have very severe consequences for human life or health. And part of this is a question of short-term versus long-term view. If you're looking over the long term, yes, those who are the most vulnerable, are those who are going to be affected by climate change as well. But in the short term, I think this was a much more difficult exercise than for tobacco. And then on active ownership and investments for sustainable development, I think we were very clear that these are both very positive, have a positive environmental impact, and are both ethically and financially responsible. So our decisions. We decided to divest from coal companies, and we landed on coal pretty early. Yes, it is a smaller portion of the market. We decided it would not be financially responsible for us to include oil, or divest from oil and gas as well. That was just so much of the market that we could not defend it. And the next question when you decide that you're going to divest from coal, and I should add also that coal has significant effects on both local pollution. It is the highest, compared to the other sources, it's a lot more carbon emissions per unit of energy. And it doesn't really belong in a 2-degree scenario world. But once you decide to divest from coal, then the next question is, what is a coal company? And this is a little bit more difficult than you would think. So we set our initial level. We said, well, at a minimum, it's going to be companies that obtain 50% or more of their revenues from both coal mining, but also coal power production. And then in December this year, we actually went farther and moved it to 30%. And this was around the same time that the Norwegian Sovereign Wealth Fund had earlier that year announced that that would be the threshold that they would set as well. Secondly, we decided to earmark an additional 500 million Norwegian kroner toward investments in new renewable energy capacity. These are direct impact investments that I'll discuss in a minute. And lastly, and in addition to that, we were going to measure and report on our portfolio's carbon footprint and exercise active ownership in companies with high CO2 intensity. So on the divestment, more specifically, 42 coal companies now we have divested from. And this amounts to about 1.5 billion Norwegian kroner that we've sold off in coal companies. And you can see the list of all the companies above. In the initial exclusion, there were 27 companies, and then 2 companies actually came in because their revenues from coal dropped. And the total list now, we're at about 42. And KLP is a kind of a pillar of our work, is that we are very open and transparent about what we do and why we do it. And so we published this list. We published about a 15-page document describing exactly why we drew the line here and which companies were affected, and also what their weight was in our indices. And a little bit on the impact and influence. Here are a few examples of some of the media coverage that KLP garnered. And we knew that in Norway, this would attract some attention. I think we were definitely overwhelmed by how much attention we garnered internationally. And I think one part of that is definitely the fact that we were so open about it, and it was very clear why we came to the decision that we did and where we drew the line. And also timing, it was a major factor, because we came to this decision to exclude coal in advance of the Norwegian Sovereign Wealth Fund making the same conclusion. And so I think many saw KLP as kind of an example of they could point to as a large investor that had proved that this was possible. So a little bit on how this has affected our carbon footprint. And here you can see the comparison. The X-coal shows the comparison from the initial benchmark. And you can see for these portfolios, we've experienced a reduction between 11 and 25% in the carbon footprint for each of those portfolios. And to us, this says that this was a good bang for the buck, actually, because we've divested from a fairly small portion of our portfolio and achieved a much larger reduction than we would have expected. So now I'd like to talk a little bit about our strategy as an active owner. So KLP has been a partner, the Norwegian partner for CDP, which was formerly the Carbon Disclosure Project, since about 2007. Many of you are probably very familiar with CDP. They're most well known for their work on encouraging companies to report to them on their carbon emissions and then providing that data to investors. And over the past year, they've started a really exciting project where they're doing these sector reports, where they're looking at specific industries and benchmarking companies within those industries on their carbon strategy and their emissions so far. And they started with the car industry and then went to the European electric utility industry. And for us, we thought, this could be really interesting for engagement because they were very clear about what kind of steps each company should do. And so we work very closely with 2 other Nordic financial institutions, and we're always interested in adding an Icelandic one, I should add. And we contacted CDP as well to see if we could get a collaboration going where we engaged with these companies together based on this report. So you can see the list of the companies that we've contacted. I have to say on the car side, this report came out about last spring. We contacted the companies, including Volkswagen, in the summer, and then we found in the September that maybe we should put a big question mark over all of the results in that report. But we will be continuing with this, and the next sectors are the reports that have already come out on the chemicals industry, on mining, and I believe the next report they will be coming with is oil and gas or consumer goods. We're also engaging with just the most CO2 intensive companies in our portfolio generally, even if they're not mentioned in these reports already. And we're beginning on that score with those that do not report to CDP at all. And I just want to add on the kind of the momentum that's going on with companies. This is just a slide about the RE100 initiative that many of you may be familiar with, about companies that have committed to go to 100% renewable energy. And I put this up here just to prove that this isn't a pie-in-the-sky endeavor anymore. The capitalists are on board, and this is not just the granola-eating hippies. This is a real change that's coming. So the third pillar in our climate strategy is on integration. And by integration, I mean how we integrate information about the climate into both the choice and the size of our investments. And as a passive owner, we have a little bit less leeway in doing so, but one way that we have done so is through direct investments in renewable energy. So we have, since 2012, a mandate for investments in sustainable development, and this is operationalized through a cooperation with Norfund. And Norfund is a Norwegian government fund that, among other things, provides investment capital to projects for renewable energy in developing countries. So we have a 50-50 partnership with Norfund for some of these renewable energy projects. And these projects, this is not charity, I should underline. We expect a competitive financial return, but at the same time, we're willing to accept a higher risk than we would otherwise with our investments. And these also contribute to job creation in the areas, and they provide renewable power in places where the alternative would often be coal. So here's an overview of our investments thus far. And as you can see, most of them are in Africa. We do have one project under construction in Honduras. But it's important to add also, this is very important to engage in this type of investment in renewable energy in developing countries, But it's not easy either, and also from a social responsibility context. These are difficult contexts to operate in, and kind of, the demands for example, health and safety on site. These are things that we have to follow up in a lot more than we would for, a similar kind of investment in the Nordics. And so I think they're definitely worth that, but I think it's important to be clear about that as well. Thankfully, with solar projects, you can kind of put them up, and it's not it's not too involved in terms of kind of the risks to the workers there. But wind especially is something that requires some following up. Now, I'm not going to go much into green bonds because I think this has been covered very well by Asbjørn already. These are just examples of two institutions in Norway that have issued green bonds. KLP has invested in green bonds. Actually, you might be surprised to know that KLP was more heavily invested in renewable energy than in fossil fuels, even before we adopted our climate strategy. And the reason for this is that we are very heavily invested in Norwegian hydropower bonds. So while these weren't actually labeled green bonds, they kind of are green bonds. So this is something that's always been very important to us, and we intend to continue to do this. So I just want to add a few kind of concluding thoughts on what we've learned so far from this. I think one is, we've been very surprised, I would say a bit overwhelmed at the kind of increased focus and this momentum that's been going, and then with Paris coming. And we noticed this from the media, but we noticed it also from our customers and stakeholders. I mean, a week won't go by that we won't get a call from one of our customers asking us to explain some element of our climate strategy, or to ask us why we are invested in this or that company. And that really helps push us forward. We also see that the fund industry is really getting on board, and there are new initiatives to be able to compare funds. Funds are putting out their carbon footprints, so that's something that customers can take a look at. We see that Morningstar has a partnership now. They're going to issue fund ratings on environmental, social, and governance more generally that are going to come out within the next quarter, I believe. And this may have the potential to really alter asset managers' preferences. I think I would also say we were in line with the kind of feedback we received from customers. One thing that I forgot to mention as well when I talked about divestment is, when we made this decision, we were a little bit nervous about how it would be received from our institutional customers. And so before the announcement, we actually called up to some of the largest institutional customers in our fund. And, to a fault, the response we received was, that's great, totally support it, and that's fine. And I think we were really surprised by that, but it shows that maybe our customers sometimes are more enlightened than we think. And I just want to add on that, though, one reflection or a word of caution. I should say that on the coal divestments, I mean, these have been financially positive for KLP. I don't speak a word of Icelandic, but when I see Ingvar's slide where he's showing the coal indices versus the S&P 500, I understand what that means. But for KLP, we've been clear that was never a motivating factor in why we did this. And should the graph, begin to go the other way, we're not going to change our decision either. But I think it is a question that we ought to consider for the broader industry. If there is a recovery in the fossil fuel sectors, would we have the same kind of focus on this, and will our strategies change from what they are now? And I'm not sure that the momentum would have been the same were it not for the industries kind of going in the tank, so to speak, for the last year. But I just want to close in saying that I'm more than happy to discuss any more of the kind of the operational details, if those might be of interest to you. And I'm really curious to hear a little bit more about the discussion that's been going on in Iceland in the financial sector around climate finance. But I'm very thrilled to be able to speak to you, and this is the end of my remarks, so I welcome your questions in the question and answer period.